All right, what's going on, everyone? Welcome to the Mission Driven Made podcast. We have a very special guest today, so make sure you stay until the end. I first met our guest about 20 years ago playing on the same junior football team. And what inspired me about his story was leaving the comfort of a very successful career to start his own business in the financial world. Today, we're going to learn a bit about entrepreneurship and also about being successful with your finances. Just a quick disclaimer, this isn't specific financial advice. Please personally contact an advisor directly to do that. I want to welcome the founder and wealth manager at Faubion Wealth Management, Matt Faubion. Welcome to the Mission Driven Made podcast, where our community helps people pursue health, wealth, and purpose in their life. How's it going today?
Jake, it's going great. Great. Yeah. Thanks for having me on.
Of course. I was so excited, like we were talking offline a few minutes ago, that you're my first finance guy on the show. I want to have a bunch of you, but you're the number one. So I'm really excited for that.
Yeah.
Awesome.
Yeah, no, that's great. I'm glad to kick it off.
Of course.
And this is also my first guest appearance on a podcast as well. So pretty excited to be here.
Awesome, man. Awesome. And did I miss anything? I ask everyone this in your title when I introduced you. I want to make sure I get all of it out there.
So you really nailed it from a titling perspective. I'd say the only other thing from a credentialing standpoint for, if that matters for people, is I am a certified financial planner professional.
Gotcha.
Yeah.
Awesome. And now, just jumping right into it. And many entrepreneurs have quite a unique path to get to where they are. So can you kind of tell us about what your path was like to get to where you are today?
Yeah, that's such a great question. And thanks for giving me the platform to discuss your journey. I don't really have too much time to, think about how I got here, but I'd say that, I've always been entrepreneurial. I've always had that kind of owner mindset and mentality. And, I've had various business ideas going back to, time back in Pleasanton when, growing up together and that kind of stuff. All of that kind of in starts and stops, nothing really stuck, I guess. So for me, it's really been more of like the ingrained mentality or perspective of, really being, kind of your own CEO or own boss, and just having that mentality carry you through, what you're doing in life, and how that translated into, I guess, my professional path has been, I guess, taking the road less traveled, whenever there's been decisions to, do something either, maybe for short-term gain or long-term gain. I typically take the long-term gain route, so to give you an example, right out of college, I took a 100% performance-based job at a wealth management firm in the Bay Area. They were only working with, $1 million clients. And my job was to bring in $1 million clients, and I wasn't going to make any money until I did. And so, who does that graduating college with, a bunch of student loan debt and things like that, but I did, because I saw the value in the experience built and, building up, a clientele at that point, so early in one's career, that it would be something incredibly valuable down the line. And, here I am less than 10 years out of college. And, I'm a year into having started my own business in wealth management. And, I would not be where I am today, had I not taken those kinds of routes, really pushed myself and not taken the short-term gain type of route.
I love that. I feel like there's a huge takeaway for anyone listening to sometimes do the delayed gratification route versus the instant gratification that someone would see right in front of them. So awesome. Fantastic answer. And so you're sitting there the day you decide to leave your career to start your own business. Can you explain what that was like emotionally for you?
Yeah, I mean, it was incredibly emotional, and for a variety of reasons. So I guess let me kind of set the stage
Yeah.
for what the decision entailed for me. So my previous role was as the head of wealth strategy for a boutique wealth management firm in San Francisco. On paper it was a great position, and it was something from a professional opportunity standpoint, it was great. But I had been there, and it became something that I realized was not for me for a variety of reasons, um typically kind of boiling down to cultural fit. And so I was looking around for other firms by the time this was going into 2020.
Gotcha.
And I was interviewing and things like that, but I had been mulling and kicking the tires of opening up my own business for a number of years, thinking about and brainstorming how I could do it. But it had never been a foregone conclusion that that was what I was going to do. um and so I was interviewing in the early part of 2020, and then COVID hit, and all of those, the markets tanked, and the economy was in free fall, and there's a lot of uncertainty around that. And well, all of the companies that I'd been interviewing for just stopped. They put their hiring plans on the shelf. And the situation at my position, though, had deteriorated to the point where it was really starting to affect my personal life, my family life, my mental health. And basically, it was a decision that I valued my my personal health and my mental health much more than the paycheck it was providing me and my family. And so that was really the decision, was to step away from that position, in the midst of all the craziness of COVID. But ultimately, yeah, like, that's a very scary thing to do. One, so that, like, all of the fear, uncertainty, doubt, huge elements of fear going into that decision. But it gave me the time and space needed to really figure out and understand what was the best path forward. And for me, then it became an element of um, excitement. When I really started to look into how I could make this happen, and it became more doable. And so, 2 weeks after having resigned is when I went all in. When I fully realized, like, there wasn't really even a decision to be made. It was just the path forward at that point.
Awesome. You get me pumped up just thinking about that. It's amazing. And
Yeah.
I've noticed too, it's so easy for people to look from the outside in and see others people's success and believe that it was easy or that it just happened overnight. So can you kind of tell us about some of the challenges you faced when you were starting the company?
Yeah, yeah. And we kind of chatted about this in the off section, but I think there's definitely a bit of at this point, it's been me, myself, and I at this juncture. I don't have any employees, I don't have any partners. I've been doing this for a year now by myself. And I've always been a team oriented person, team sports growing up. Going to college, was part of a fraternity, and in the workplace, I've always wanted to be a part of a team. Um, and that has been a really hard transition. Even though I've always been, a self starter, disciplined type person. Um, that has been a challenge, I think, that I've appreciated or underestimated going into it. And so just in general, I'd say make sure that, if you are going down this path or whatnot, to have a support group, have your friends, have, family that you check in with regularly, to, kind of air out what you're going through. Because it can get really dark if it's just you and your thoughts left to yourself in isolation.
So it's pretty safe to say if someone is looking to start their own business, they are going to face some challenges.
Yes,
Gotcha.
definitely. And I'd say with respect to the work behind the scenes, I mean,
Yeah.
yeah, there's the level of work ethic that goes into it. I mean, I'd say from the outside, yeah, it looks, or it potentially looks like, what's the joke is, after 10 years they were an overnight success, something like that,
That's great. I got to write that one down. That's good.
Yeah. So, there's the work involved. You gotta chop the wood, right? You
Yeah.
gotta do the work. And, there over the years, there's been a lot of, sacrifices and things like that. And those are just the kind of just, they come with the territory, I guess.
Gotcha. Gotcha. So I want to transition now to the main part of the show and talk about being successful with your finances. Is it just me, or did they not teach too much about financial literacy in school, or at least high school?
Yeah, Jake, try zero.
Okay.
None. Yeah, a big goose egg.
Yeah.
And it's a shame. It truly is a shame. In fact, I was just reading up this morning that millennials,
Yeah.
our generation, currently the youngest millennial is turning 25 this year. And we as a generation hold only 5% of the nation's wealth.
Oh man.
Um, and to put that into perspective, Gen X, when their youngest turned 25, so basically apples to apples comparison,
Yeah.
they held 9% of the wealth.
Oh geez. Oh no.
Yeah, and going back to baby boomers, when the youngest turned 25, so again apples to apples, they held 21% of the wealth. And I think there's a big problem in our country. I think financial
Yeah.
literacy is absolutely one of the big reasons for that. Now, there's also a lot of economic reasons for it.
Yeah.
But also having financial literacy is a big element to that. And yeah.
Awesome. And we always hear the cliche about financial freedom. What does that even mean to you?
To me, it really means being able to do what I want, when I want, for however long I want. That is ultimately the bottom line of how I would define financial success. I'm still, working to get there for sure. I got
Of course.
a long way to go for that. But that's ultimately how I define it. And then, ultimately, then the question then becomes, what do you want? And there's, the societal kind of prescripted things that, we're kind of shoved down our
Yeah.
throat. It's to buy a house and, get married and buy a house and have dogs and kids and, buy the car and work until you're, 65 and retire and golf every day,
Yeah. So true.
that's the prescripted,
Yeah.
society. And, that's not necessarily what I like to help clients do. I like to help, clients when I'm working with them, and friends and family, whoever I'm talking to, is really get to get to the why and get to the what.
Awesome.
And understand, how do you, like, let's take a break. Let's be intentional here about, what do you want your life to look like, and how can we then best go, achieve that? What are the financial resources that you have to do it?
Yeah.
And that's ultimately, it's also kind of a mindset of realizing you have the ability to mold your future through the actions you start taking today. And
Absolutely.
that's also what I think, you start going down the path to financial freedom the second you start thinking in that way.
Awesome. And I heard something recently that was very interesting. So someone was saying, if you have financial problems, it kind of doubles every other problem in your life, so to speak. And the example was, say your car breaks down and you need to change a tire. Now, not only do you have a problem with your car, you can't afford the tire now. So it was an interesting, way to think about all of that. Even if it's not the most important thing to you in the world, finances, it does have a really large impact, it seems like, on many other parts of your life.
Yeah, absolutely. Money doesn't solve all problems 100%.
Yeah.
But it solves money problems.
Yes, absolutely.
And there are a lot of those.
Yeah. Yes. So I know this might be a little bit too general, but just say someone's young and they come up to you and they want some advice how to be successful with their finances. Where do you start with someone?
Yeah, I mean, I think that's really, it's tough, because someone could come from totally different standpoints, right? But I think, and perspectives, and the ways they view money, and all of that kind of stuff. So it's definitely not a one size, fits all. And there's so much misinformation out there. There's so many people saying, hey, you got to do this in real estate, and this is how you become successful.
Yeah.
Hey, you got to do this in the stock market, and this is how you become successful. Or you got to start a business, and this is how you become successful. And there's a lot of merit to those things. But ultimately, I think, people are missing the forest for the trees here.
That's good. That's real good.
And ultimately, when you're starting out, you've got to start with the basic building blocks of finances. And that's really understanding, how money works. And really the ultimate key to long-term financial success isn't about, how you do the investment analysis, and, what are the, rents going for real estate, and, how am I going to start up this business and sell it in 10 years? It's really not any of those things. Now, of course, those are part of it.
Yeah.
But you have to start with the basics. And ultimately that boils down to behavioral aspects of how you deal with money on a day-to-day basis. How do you view it? What are your money habits? There are good money habits, there are bad money habits. And, I actually just finished reading Morgan Housel, who is a, prolific, finance writer, blogger. He's very active on Twitter. Anyway,
what was the last name?
Housel.
Okay, I'm gonna have to look him up.
Housel, I believe.
Gotcha.
Yeah. And he just wrote a book called The Psychology of Money. I highly recommend it.
Okay. I've seen that one. I didn't recognize the author's name, but I've heard of that book.
Yeah. And I mean, he basically just lays out a very well-written argument, and 200 pages or so, that financial success boils down primarily to behavioral characteristics or behavioral traits.
Gotcha.
And that's, what I would have, I'd say, one, it's understanding how money works and how you work with money. And that's why it's so different for every person. Right.
Gotcha.
But if I had to say, if there's one thing starting out, and I think there is one thing, How you actually do it is different for every person, but there is one thing, and that is it's all predicated on mastering cash flow. And that is understanding how money works, right? So managing what's coming in, what's going out, how much are you saving, how much are you investing, where is the money going? If you can't master cash flow, if you don't understand how money is flowing in and out of your bank accounts and all of your, your life, basically, you're feeling around in the dark at that point. And that's also why, I think there's so much, this goes into the financial literacy thing. This goes into not understanding how money works. It goes into the behavioral characteristics of, I think that's one of the reasons why there's, the Robin Hoods of the world and the Wall Street bets of the world, because everyone doesn't understand, or not everyone, I shouldn't say everyone. A lot of people don't understand what are the basic building blocks of building long-term success. And it's not sexy and it's not flashy. But that's not what people want. They want the quick fix. They want to, invest in the next GameStop that goes to the moon. They want to invest in Bitcoin because it's going to change the world and it's going to become the new global, monetary standard. All of these things are, kind of hopeful dreams that will make them rich. And maybe it will, but that's like buying a lottery ticket. And if you win the lotto, saying that you had a good investment strategy. It's not. It can work. It works for the people who win the lotto, but your probability of success is very slim.
Gotcha. So kind of a similar question. So if someone came up to you in one long-term investment strategies, is it kind of the same answer? You're going to start with the behavioral aspect first and understanding cash flow?
Yeah. I mean, definitely. And in terms of, an investment strategy, is that the question?
Yeah, like long-term. If someone, again, we'll say, has a, small amount of knowledge about finances, makes an average salary, hasn't invested before, is quote unquote average, I guess you could say, and is looking for smart long-term investment strategies.
Yeah, I mean, I think I would just take a chart of the S&P 500 and zoom out, zoom out over 10, 20, 50, 100 years and just show them, what does it do? It goes up and to the right. And of course there's volatility, in the financial crisis, the stock market went down like 57% or something like that. And last year, the stock market went down 35% in 3 weeks, because of COVID.
Yeah.
So yes, it's volatile for sure, but we're talking about long term, right? If we're looking at long term, the odds become heavily stacked in your favor the longer your time horizon go out. I believe I'd have to look up the stat. I can send it to you afterward, but I believe it's either every 15 or 20-year rolling periods going back 100 years in the stock market, that 15-year rolling period or 20-year rolling period, that they 100% of the time have positive annualized returns in the S&P 500.
Gotcha.
Going back 100 years. So, if you talk about having odds stacked in your favor, if I told you you put money in the stock market for the next 10, 15, 30 years, which really, at least, you and I are talking about that long in terms of like when we'd theoretically be retiring, and someone just starting out, absolutely. We're talking about holding periods of, at least 20 years plus, right?
Right.
Now, of course, if someone wanted to invest for real estate or something else with a shorter time horizon, then the recommended portfolio would be different. But if we're talking about long-term retirement, just,
Yeah.
just take a look at the S&P 500 over the long term. And that's where I would start with them for sure.
So when you say S&P 500, are you saying like maybe invest in index funds type of a thing?
Yeah, I mean, so getting into like specific, security selection and things like that. Yeah, I mean, you can be the market. It's super
Gotcha.
cheap, right? I mean,
Yeah.
just invest in the, Vanguard S&P 500, ETF, costs you like 3 basis points or something like that, super cheap.
Awesome.
And you can be the market. Definitely believe in that over the long term, the market's pretty darn efficient.
Gotcha.
So yeah.
Awesome. And I'm personally a huge proponent of IRAs. So I wanted to see what your opinion about IRAs are, and if you can expand a little bit what an IRA is, or excuse me, a Roth IRA.
Yeah. So Roth IRAs are great. They're part of the new, well, not new, I shouldn't say new, but they're relatively newer in the tax code, like over the last 20 years or so. And they differ from traditional IRAs. So I guess let me just explain a traditional IRA and then a regular IRA as well. So a traditional IRA, it stands for individual retirement account. Basically, and it's taxed just like a 401k as well, or treated, where you're able to put money into an account and you get a tax deduction for that contribution against your income taxes in that year. The funds in the account grow tax deferred, and then when you pull money out, it's then taxable to you.
Gotcha.
So it's a front end benefit from a tax perspective, but then taxed on the back end.
Gotcha.
A Roth IRA is basically the reverse of that. You don't get the initial tax benefit of a tax deduction in the year of contribution. It grows tax deferred or tax free, really, because when you take money out of it, if you satisfy the holding requirements and things like that, which I won't get into, but if you do that in retirement, you're not taxed on it at all. So you have all the gains in the account, over the years, tax free at that point. So it's very beneficial. It's something that it can be very powerful for a client, and it's often, something that I use as a planning tool to optimize for tax efficiency over a client's wealth strategy over the long term. But it's going to be, very, everything that I do for clients, individual recommendations, very tailored and personalized to their specific plan, strategy, where they are. So it's hard to say, give a blanket kind of general statement of, this is a tried and true thing, everyone should do it. There's no silver bullets in planning like that. But I do think moving forward, given, the political climate of taxes and everything like that, I personally do believe that we're at, kind of a low point right now for taxes in general, income taxes and capital gains taxes. I mean, we're seeing it now with President Biden's plan to increase taxes for those who earn more than $400,000 a year, potentially raising capital gains rates as well for millionaires. And given the political climate, it is also probably likely that the Tax Cuts and Jobs Act under President Trump will most likely expire. That's something that a lot of people don't know, is that they were only a temporary cut in taxes. That law will most likely expire in 2026, which would revert the tax rates to pre-Tax Cuts and Jobs Act. So basically President Obama era taxes, which would increase taxes for those who earn less than 400,000.
Got it.
Again, well, that's in the future, and we'll see, right, where that ends up. But I think we're basically kind of bottom line is that taxes will be going up for really the foreseeable future, most likely for most of our lives, especially considering, the amount of fiscal spending that the central government is doing.
Yes.
Federal, that they're spending. They're going to have to pay for this stuff somehow. So anyway, long story short is, if you're able to get assets into a tax-free account like a Roth and taxes go up, it's even that much more beneficial to you in the long term.
Awesome. And I could tell you've been doing this for a long time, because I've been studying, Roths for a little bit, and how you just explained it to me, it's like 2 more light bulbs went off in my head. It just made more sense. So I could totally tell you've been doing this for a while.
Yeah. You learn some tricks of the trade, right? How to explain things in pretty simple terms. It's and that's really what it's all about, is being able to communicate, these concepts, for sure.
So. Is that something you do with your clients a lot, kind of explain to them these things? Or is it more of like, just do this, this, and this?
No, it's a lot more of the former, a lot more
awesome.
Education involved, explaining how things work and why, certain strategies make sense or don't make sense, or things like that. There's definitely a lot of education involved. And honestly, it's probably, I think you probably sensed I kind of lit up explaining these things. It's probably one of the more satisfying elements of the role, is being able to just work with people and help them to teach them really how this stuff works.
Fantastic. All right, cryptocurrency. Let's talk cryptocurrency. I heard you mention it a few minutes ago. Where do you see this going, short term and long term? And if, again, you have any general recommendations for people?
Again, like, no specific recommendations. There's definitely no buy, hold, sell ratings going on over here. But I just think of Kramer hitting the buy or sell button.
That's great.
No, but truth be told, I think cryptocurrencies are here to stay. I've been a follower of Bitcoin since I first found out about it in, I want to say, like 2013, 2014. I went down into the wormhole of, reading the white paper and listening to a million podcasts and, reading up on it. And, I believe there's going to be a shift to a digital economy. I mean, we're seeing it in what seems like fast forward right now over the last year, with COVID and the shift to remote work and everything. If you weren't somehow utilizing the internet for business prior to 2020, well, you are now, or you're out of business. I mean, have a choice. You don't have a choice. And this is where the world is going. And I don't think, I think the world I think what's happening is there's a burgeoning asset class of digital assets. It's not just cryptocurrencies. Cryptocurrencies are a specific sliver of digital assets. And we're seeing this, with decentralized finance. We're seeing this with NFTs. We're seeing this, of course, with the hundreds, if not thousands, of cryptocurrencies, all, with a specific purpose and goal in mind. And of course, most of them are going to fail. That's just, creative destruction. That's just how the economy works.